Hi, I'm Richard Hemming, founder of Under the Radar Report. Today I'm going to talk about small caps. When you think about small caps, often you might think high risk. And I'm the first to admit they can be. And we do not get every stock right. We don't. But what we do get right is returns. Today I'm going to give you 3 quick portfolio tips. Tips that reduce your risk and increase your returns. Preserve your capital and deliver outsized gains. Look, here's the proof. Our small cap portfolio has returned 22% a year in the past 2 years. That's 20 percentage points higher than the ASX All Ords Index. Following these 3 quick tips can help you achieve the sort of returns we have. Tip 1, the money is made in the holding. That is a truism that never fades. What does this mean? You can get good outcomes with low risk out of small caps. Why? Because you need to be patient. You stick to your principles, which in our case is value, and you don't overtrade. You don't overtrade. At any one time in our portfolio, we hold 20 or so positions. This is in a range of industries, in a range of different balance sheet types, in a range of different customer types. In short, a very diversified portfolio. That is the big learning in the past 20, 30 years is diversification reduces risk, maximizes returns. But the key is that our 3 biggest positions, we've leveraged into them. They've become the strength of our returns are in the 3 biggest positions: Austal, Evolution Mining, and Superloop. These are all close to multi-year highs. And we've held all these positions for more than a few years. So keep holding. Tip 2, have discipline on taking profits. Look, I mentioned those 3 stocks and we have made a lot of money on them, but we've been taking profits along the way. Look at Evolution Mining. We're taking profits. We've taken profits late last year and we're taking profits again this year because the stock gets to more than 10% of the portfolio. So all our stocks are less than 10% of the portfolio. What we're trying to do is sure maximize our gains, but we're also trying to sleep at night. So we don't want one stock to be overrepresented in the portfolio. This doesn't always work for everyone, but this is our philosophy. The other key point to make here is that the stock market can give and the stock market can take away. So you really do need to lock in those profits. And we provide a systematic way of doing that. Tip 3, don't let your losers get you down. Don't let them get you down. I know when you have a loser, it occupies a lot of your bandwidth, a lot of your mind. It's hard. But look, we do emphasize our losers, admittedly, in our portfolio analysis, which you'll read about in this week's report. We do spend an undue amount of time on them compared to our winners, because if they're winners, there's no problem. If they're losers, we do think about them. Like in this week's report, we talk about ARN Media, we talk about Dow Pacific, we talk about medical developments, we talk about other stocks, but we focus on stocks that are laggards. But you've got to remember that these have to be put in perspective. These are 3 of 20 stocks that we hold. So you don't want to let yourself get overly like focused on the losers. You want to be moving on from them. And how you move on from them is you focus on fundamentals. That's where we can help, because that's what you need to focus on when you do have a losing position. Because what you don't want to do, and forgive me for another cliche, you don't want to throw the baby out with the bathwater. You don't want to sell because because you're anxious, because you're angry that a stock hasn't done well. You want to look always at the fundamentals, which is where we come in. And you really need to, I guess, think carefully before you act impulsively. Or you want to think carefully before you act. Don't act impulsively. It's not being too reactive in the market. It's doing things little by little. Stocks can and will disappoint. The key is not falling in love with them. That gets back to fundamental research. That's why we can help you really put those stocks into perspective. Often stocks that I've written off, they've come back and done really well in our portfolio. Look, you don't want to overreact. And I promised a bonus tip. The bonus tip is hold cash. Look, this is an art form, I'll admit, but I guess when you look at it, you want to be holding more cash than less cash. What am I talking about? Well, at the start of the year, at the end of last year, we were holding 30% of our portfolio in cash, or just in the late 20%. It's actually about 27%. We saw opportunities and we've been buying incrementally. So we're buying little by little. Now we're at 20% of cash. So we still got a high cash weighting. If there is total bargains everywhere, maybe you might go down to 10% cash. We haven't done that because basically we want to keep our firepower. We want to keep prepared for when there are bargains. We don't want to be throwing money into the market. I keep saying it's little steps, buying a bit now, look and see how the results go, then buying a bit more, taking profits. There's no quick fix. It's all about little steps. I can never emphasize that enough. So you need to check out our 650th issue because we really do deliver a big rundown on portfolio management. We also deliver a new stock, which is fascinating, a fascinating company, which I really did enjoy researching. We're coming out with more portfolio analysis next week. We're coming out with the table of which stocks we hold in our portfolio. And we've also got blue chip. It's a lot to look forward to. And thank you for listening. I'm Richard Hemming, Under the Radar Report.